All right. So we should be live, guys. I apologize for that. We're having some difficulties here. Let me know in the chat. If somebody could let me know in the chat if you guys can hear me, if the audio looks good. If everything is going through there. Let me see. On the chat. Looks like it's good. So yeah, if somebody could just let me know in the chat if we're good, if the audio is good, everything like that. Let me refresh this. Okay, sweet. All right, sorry about that, guys. I had some issues with my streaming software, but looks like we are good to go. So let me jump into it here. Switch this over. So the way this is going to work is I am going to kind of go over generally my analysis of these earnings, and going to talk about kind of my thoughts, mainly focus on the revenue and kind of the backlog, the bookings that they've got from those contracts, how much I think those contracts are eventually going to be worth, things like that. And then I will take any questions from the chats. If you guys have any questions or anything that you were kind of curious about in the earnings, definitely throw them in the chat. I may not get to it right away, but definitely after kind of I've finished my analysis, I'll make sure that I go through all of the questions from the chat, and we'll talk about everything from there. So let's just jump right in. First of all, I do want to note that there were some kind of meaningful changes in things like sales and marketing and research and development, things like that. Most of those are going to be explained by some receivables that still haven't come through, and also the COVID relief funding. They got about $600,000 in COVID relief funding this quarter, and if you look at them quarter over quarter, year over year, there's different amounts of COVID relief funding, and so that can kind of skew the variations in different line items and how much each of them cost. I've said before, I would kind of prefer them just to write down each line item, the actual cost of each line item, and then subtract out in a separate line item the COVID relief funding. I think that would make it a lot easier for investors and even the people inside the company to really evaluate their progress over time and the cost over time of different line items, rather than, oh, we didn't get COVID relief funding this quarter, cost shot up, oh, we did, the cost shot down. If you didn't have that worked already into the cost, it would be a little bit better to read, but that's how they're how they're kind of allocating that for now. So that's what we're working with. You're welcome, Joshua. Thanks for watching. Let me just get into it right here with the revenue. So if we look at the revenue here, we can see the company earned $152,000, or right around $152,000 in revenue during the 3-month period, April 30th, 2021. So they actually do break that down right here in the next 2 paragraphs. 67,000 of that or so was actually specifically related to the sale of PAT-scan products, and 85,000 of that was specifically extract revenue. Now, just in case you guys are curious, what I'm looking at here is the MD&A. I also have open, and we'll go back and forth between that, the actual financial statement, the financial release that they have on their website. So if you guys do go to their website, you'll have a couple different options of documents to look at. The main difference between the MD&A and the financial statement is the MD&A usually offers a little bit more kind of commentary from management on the actual numbers. So because the company doesn't actually do an earnings call, this is kind of the best thing that we have to kind of get their thoughts and analysis on things like that. And we'll also get into the footnotes in the financial statements as well. And we will talk also a little bit more about whether or not this is kind of the first installment, maybe, or the first installments of some of these contracts that they've closed, or whether it's something else. We'll get into that a little bit later on here. So the next paragraph here is where it gets interesting. So we have some deferred revenue here, but then they go down here and it says, as of April 30th, 2021, the company has a backlog of about $1 million in contracted commitments not yet recognized as revenue. And then subsequent to the quarter end, the company was awarded an additional $2.2 million in commitments. Now, before you get too excited, after digging into it a little bit, that 2.2 million or so in additional commitments, that's actually the extract revenue or the extract contracts that they're referencing there. So even though it's kind of worked in right next to the backlog of PATScan, this is actually part of this is some extract as well, and part of this or all of this actually is extract. So if we take a look at, and this is where it's good to go into the footnotes. So for any of you that are wanting to follow along with this, I'm currently on, let's see, what page is this? Page 22 of the financial statement, and this is footnote number 13. So this is where it goes over revenue and deferred revenue. And yeah, thanks for the questions, guys. I will get to them in just a second. Just going to walk through this first of all. So let's see. So this is where it really breaks it down, and we look at here, subsequent to quarter end, extract was awarded. So I'm looking right down here. Extract was awarded contracts totaling that's the same exact number, right, that we looked at over here. Same exact number as this, basically 2.2 million. And they were awarded those contracts subsequent to the quarter end, and they expect to recognize 100% of that revenue over the next 24 months. So the next 2 years, basically. So that means that over the next 2 years, and by the way, they do note in another footnote, I forgot exactly where it was in the report, but that 2.2 million is actually including the 1 million or so contract that they made an announcement on their website and put out a press release. So that's included in that. So they're gonna get about 1 million of that over the next year, right? And maybe the rest of it kind of sprinkled out over the next 2 years. They didn't quite define. Maybe they'll make another press release for the other contracts that they have there. But just keep in mind that 2.2 million, this number here that they're referencing for extract, even though it says subsequent to quarter end, that's talking about the total of those contracts. So if you guys remember from, it's been, the links and everything have been circling kind of around the Facebook groups. There was one contract that was about like 1.1 million or so, and then there was about a $200,000 contract, right? So that totals to about 1.4 million or so. And then we had this other announcement about the 900,000 or so, about $1 million contract that they just announced on their website. So this basically is the total of all of those contracts. So just keep that in mind. It's not an additional 2.2 on top of that $1 million contract. All of that is worked into there. Still a lot of money that's going to be coming in. So still good. Now this is the part I really want to spend some time on here. So it works out here that the contracted, not yet recognized revenue for PATScan, right, as of April, if I can get my mouse to work, April 30th, 2021 is about $821,000 in revenue. So if we look back up here for just a second, they do mention that contracted, let's see, contracted, oh, right here. So contracted, not yet recognized revenue for extract is 215. So if you remember that number that they originally gave of the about 1,036,000, if we go back to here for a second, this number here, okay, that is the total of the extract contracted revenue not yet recognized. If we go back here, so this 215,000 and this 821,000 here. So that is the total of that. So specifically PATScan, remember, specifically PATScan is 821,000 roughly in contracted revenue not yet recognized. So this basically, this is most likely, I'm 90% sure that this is the 4 contracts that they announced, that Peter announced on the webinar. Again, for all of you putting in questions, I really appreciate it. I will get to most of those at the end. Let me just see if there's any. Do you believe in Peter Evans' optimism, or is it just to pacify shareholders? I actually think Peter, by the way, is approaching this really pragmatically in a really good way. I mean, he's not over-promising, right? He's in a way a lot of times under-promising. He doesn't like to announce anything unless it's, you know, a sure thing. And I think he's really taking a nice level-headed approach to this. He knows a lot of shareholders have been, you know, let down in the past, and I don't think he wants to do that again. So let me see. To be honest, let's see. It doesn't look like there's any more questions. Definitely put any more questions if you guys have any more questions. Feel free to throw them in the chat. Let's see. So this is what I want to get into here. So of that 821,000, it says the company expects to recognize approximately 600,000 over the next 12 months, with the remainder to follow subsequently in the subsequent 24 months. Okay, so they have, Peter said that they're going to do roughly 3-year contracts, right, with an auto renew on the end. But if we just focus on the 3-year contract, okay, then that would mean to me that we're probably going to see that revenue spread pretty evenly, maybe a little bit more on the front if there's maybe some upfront costs of different things like that, but pretty evenly over the course of those 3 years, right? And so it's a little odd that we're seeing 600,000 of that 820, basically over 2/3 of that total value recognized in the first year. And what I think is happening here, and Peter mentioned in the webinar, some customers might pay up front. What I think is happening here is we're having at least one customer pay up front. Now, before you go and say, oh, well, we didn't see any, you know, major revenue, what I think may have happened, I'm talking major revenue this quarter, there's probably, you know, if we're signing contracts over the course of the month of April, say they close a contract April 21st or something like that, probably aren't going to actually go through with the payment, especially if it's a large upfront payment, maybe another week or two, right? And so what I'm thinking is some of these contracts, this 67,000 might be maybe 1 or 2 of the contracts, their first kind of month's installment, because remember April was the last month of the quarter. But I think we're going to see some big revenue show up in the next quarter in a big chunk, because I think we're going to see that at least one of these customers have paid up front. And actually, we can actually calculate here using that assumption, how much is subscription that we're looking at of this 821,000 and how much is just paid up front. So if we notice that they say the remainder to follow will subsequently, in the subsequent 24 months. So if we subtract 600,000 from the $821,000, we get about $221,000, right? And we spread that out over 2 years, that's about $120,000 or $110,000 per year, right? Well, that would mean that if this is a 3-year contract, right? Then in the first year, that subscription contracted revenue is probably also 110,000 in the first year, right? So we have 110, 110, 110. That would make sense if you're spreading that value over 3 years, right? So if we add up 110, 110, 110, right? That would give us about $330,000, right? Which would leave us with right about $490,000 left. That is just looks like a lump sum. So what I'm thinking is what's going on here is we have some customers, probably 2 or 3, I'm kind of leaning towards 3 at this point, that are on a subscription basis. and we have one customer or maybe two customers that are paying up front. And what this would mean is that very likely in the next quarter, we'll see kind of a lump sum of at least that $490,000. Now, it'll look really good for one quarter, right? But we have to keep in mind that's not necessarily going to continue. It's very likely not going to continue unless they all of a sudden ramp up some huge amount of contracts over the next few months, right? So I think that's what's going on here. And if I had to guess, I would say, because Peter mentioned, I believe, correct me if I'm wrong, somebody in the chat, you guys can go look. I believe that they signed 2 stadiums, he said, and 2 casinos. I think that's what he said. And I would think that it's probably not the stadiums that just paid up front lump sum. It's probably somebody that this is kind of covered most of their needs, right? The stadiums, Peter has said multiple times that they're going to start off with just one entrance, couple lanes, and really make sure that it works before they spread out. So I would imagine both of the stadiums, they're probably on this subscription basis. That's why they're probably very small too. And that's kind of why I'm assuming that this 490,000 is maybe one customer, because the stadiums are going to start off very small, right? We may only see $100,000 over the course of 3 years, right? Because maybe it's just 2 lanes, they're just trying out one entrance, and then they're going to build on it from there. The casinos, though, they may only have a few entrances. They need like 6 MSG lanes, and he said that some of the customers did go VRS, which I would imagine are the casinos because they have tons of cameras. I would imagine one of these casinos paid up front, and maybe they got, Peter said, somewhere up to 6 MSG lanes and had VRS. So I'm thinking casino, several MSG lanes, and some VRS, probably paid up front. Maybe another casino just started off kind of like the stadium started off small, and we have the stadiums also starting off small, and that's why the remainder of the contracts is very small. So let me know if you guys, kind of agree with me there. If you guys don't, let me go through some of these questions and see what people are kind of talking about here. Yeah, I agree. I agree, Jason. Peter seems very conservative in his analysis. Joshua main question right now is the burn rate and dilution chances. Yeah, I wouldn't be surprised if they raised capital. I don't see it as a given by any means. I would actually say it's less likely than more likely. But there may be a point, if I would imagine that if they do, I'll just say this. I would imagine if they do raise capital, it will be because they're trying to basically get enough money, enough funding to grow at the rate that they need to grow because they're bringing in so many contracts. I don't imagine they're going to have to raise money just to stay afloat, just to pay the bills, pay the operating expenses. Got to keep in mind they have, over the next 2 years, 2.2 million just from Extract, and that's barring any new contracts from Extract, right? They also have this 800,000 or so in contracts that they've gotten from PatScan so far. I would imagine they'll start signing more and more of those. I would hope so. And so I don't think that they're going to have to raise capital and dilute shares just to stay afloat. I think if they do end up doing it, it will be to accelerate the growth of the company. And I think Peter has actually said specifically that. So in a way, I'm okay with that. I never really like raising capital and diluting shares, especially as a shareholder. But I think if they do, it will be in the best way possible. I'll just say that. So I hope that answers your question, Joshua. Let's see. Question number 2 from SMM. Why are you focused on this stock? Are you getting paid by... No, I am not getting paid. I know Kevin, Mr. Pancake, is spreading rumors about that. I'm never getting paid by any company, any stock that I cover, anything like that. My analysis is my analysis, my thoughts, everything like that. I do own shares, though, to answer your question. I do own shares, and that is actually the main reason that I'm covering this stock. Right now, as a smaller channel, I'm kind of building just with the stocks, the companies that I own. That's the companies, the stocks that I'm most passionate about, that I'm most familiar with. As I do grow the channel, I would like to kind of branch out and cover just more of the broader market, more stocks and things like that. But right now, just trying to stay focused on the companies that I own, the stocks that I own, and that's why I'm focused on specific stocks like this, like Patriot One. Let's see. Yeah, so yeah, not conservative politically. Just meant conservative in his estimates. Let's see. Do we have any more questions? Just trying to front installation costs. Doesn't look like any more questions at the moment. One thing I do want to touch on. So, we probably will have more customers pay up front, like like I would imagine. I'm pretty sure that that's what's going on here. And we'll probably have some customers pay up front, but I would imagine the majority of customers are going to be subscription. The other thing that will be interesting to see, and we'll get to see this more so when they actually report more and more revenue from these contracts. Like I said, remember, I think some of this is maybe some recognized deferred revenue from older sales and things like that. Some of this may be some of the first installments, but what will be interesting to see is how they're going to amortize the cost of goods. So for any of you that don't know what that means, aren't familiar with that, let's say that Patriot has a $500,000 contract, okay, for 3 years. And let's say that the gear, and I'm just throwing, this is not my estimates, I'm just pulling numbers off the top of my head here. Let's say that the gear for that, their actual cost of the goods that they're selling is, I don't know, $50,000, okay? And so what I'm wondering, because companies will often do things one of two ways. One, you could write that. Okay, looks like we skipped out for a second, but I think we're back up. Let me know if you guys can still hear me. Looks like we disconnected for a second. They could do it that way, and then everything after that, everything after writing off that loss would be basically 100% profit, right? Because you've already written off that $50,000 right at the beginning. You said we took a loss, 10,000, 10,000, 10,000. All of that is straight to the bottom line. Or what a lot of companies will do is they'll say, okay, we have a 3-year contract, right? We're going to spread out the cost of that $50,000 across all of those months of that contract, right? So maybe then, and again, I'm throwing out percentages here. This is not my estimates or anything, just pulling things off the top of my head. Then maybe 90% of that revenue that you're pulling in each month is profit, and 10% is kind of going towards the cost of that, of whatever goods you sold, basically the MSG lanes and things like that, right? So it'll be interesting to see how they really amortize that, whether they spread it all out or whether they just say right at the beginning, we're writing off that loss, because that could kind of create some peaks and valleys in the earnings, which could make it a little bit harder to predict. So I kind of would rather have them spread it out over the 3-year contract. Again, that would also still mean that after that 3 years, if a customer decided to still stay with Patriot One, right, and continue using their product, then after those 3 years, it would turn into 100% profit every month, right? Because they've worked in the cost of their product over those 3 years. Once it auto-renews, then you're making 100% profit off of all of that revenue. So that is the really great thing about the subscription model, is once you recoup the cost of your product, all that money rolling in is going straight to the bottom line. You may have, technicians, obviously, that you have to pay. You do want to keep up with those customers, make sure you're taking care of them, things like that. So there's going to be minimal costs in there, but pretty much most of that is going to be straight profit. Carl, when will they disclose the truth about CMR? To be honest, I don't know. And for me personally, the reason that I'm invested in the stock is because I think that regardless of CMR, they're going to make a bunch of money. Maybe not overnight, right? But we all know that the market opportunity, right? And I think they're showing that they're being able to execute right now. So, to answer your question, I don't know, and to be honest, it doesn't really matter to me. If I was specifically invested in this stock for CMR, actually that is what I originally started looking at the stock 3 years ago. What piqued my interest, like a lot of you guys, and it's definitely a disappointment that they weren't able to kind of follow through at least so far, but I think the nice thing is that we know now that the company can still be very successful without, actually bringing that to full market potential, right? So I hope that answers your question. I don't think if anybody's just in this stock for CMR, for that to eventually follow through, I don't think that's maybe the best strategy, but I think that the company can still be very successful without it, and I think they're starting to illustrate that. Let's see. Yes, I have John Hen 100. I have kind of heard that as well. We'll have to see when it actually comes out. Let's see. The reality is products. Let's see. I just think we'll have to see when the revenue comes in, and it looks like it's starting to come in. And really, honestly, as an investor, the financials, the financial success of the company is the main thing for me. If the customers are liking the product, if the product is doing what the customers need it to do, then the customers are going to buy it. I think Peter mentioned this in either my interview or one of the webinars. He said the customers don't really look at it as, oh, this is MSG or VRSW or CMR, right? They just go, hey, can it help me secure my stadium in a better way than what I already have now? And is it either the same or less expensive? If so, it's probably something they're going to buy, right? As long as the transition isn't too cumbersome, right? If they can kind of gradually transition over time and work to that, and if it makes the customers happy, and even on top of that, could even make them more money because it gets customers in the door fast, I don't think they really care whether it's CMR or MSG or whatever, right? So I think that's more important. Yeah, basically what you said, Joshua. Does it work? Is it better? And is it cheaper or at least comparable in cost, right? I think that's mainly what I wanted to go over here. I will be doing a video a little bit later on my kind of projections based on kind of what we're starting to see with some of the revenue and how much they're going to be getting from each contract. I will be kind of starting to do some projections, maybe start to work up some numbers about where I think they could go. Let's say, okay, if they're able to sign 10 stadiums, how much revenue do I think that's going to make them? How much profits? I don't think we're quite at the point where I can do it very accurately, but I might, throw out some general stuff. I mean, just to give you guys an example, let's say that 500,000, let's say I'm right, let's say that 490,000 or so is one customer that paid up front, right? And that's a casino. The other contracts are maybe one casino starting out and two stadiums starting out with maybe one entrance. Well, if the one entrance is like $100,000 over the course of 3 years or so, or something like that, that would mean the average NFL stadium has about 10 entrances. You work that out, 10 times the 100,000 over 3 years, that's $1 million contract annual, or not annually, but every 3 years, right? So that's like a little over $300,000 a year per stadium. Rough estimates, right, guys? Don't take that and say, oh, start working out your numbers of where Patriot's going to be. That's just things that are kind of going through my head right now, kind of things that I'm playing around with. I do need to kind of refine that, and like I said, we don't know how they're going to amortize that over time, how much their profit margin is really going to be, how much their operating expenses are going to increase based on having to hire a bunch of, installation technicians, service technicians, obviously build out the sales team, things like that. But, now that we are seeing revenue come in and they're kind of breaking it down at least a little bit, this is when we can really start to kind of work through these numbers and get a feel for where this company could actually go financially, right? Because then we can start to say, okay, should we assign it a PE of 200, and this is their revenue, where's the stock price gonna, or this is their earnings, where's the stock price gonna be, and we can start to go through some things like that and really get a feel for, okay, how big of an opportunity or how small of an opportunity, right? Got to be realistic here. Is this stock actually going to be? So let me just make sure there's any more questions. Has been independently verified. I don't think I necessarily would say that's the case. It depends on what you mean by independently verified, Carl. I mean, I think you could make the argument that a customer using the product and being satisfied with it is independent verification. I don't know if there has been any specific companies. I would take a look. I would recommend looking at the last part of my interview. I think I asked Peter a question about what makes Patriot One's products better than that of their competitors, and he did actually mention in there that that third parties have validated the product and validated that it is better than their competitors. I don't know if he means customers or means some other testing agency, but at least we know that at least some customers have. Let's see. UCL, I'll have to check out UCL after the chat, Jason, or after the stream. Let's see. Kevin, how many 110,000 a year customers do you need to just cover the operating expense of 13 million? I actually did. I think the operating expenses are going to end up being a little more once they have to hire, more people. Like I said, sales team, installation, service technicians, things like that. As far as 110,000 a year customers, like I said, I think the 110,000 a year customers or so, we don't really know what the average customer is going to be, but I think the 110,000 customers, at least that we see in these contracts, are the stadiums that are just starting out with, one entrance, a couple MSG lanes, things like that. And those could very well be, once, Patriot proves themselves with those customers, $1 million contracts or even a little bit more than that, once they actually kind of fill out the entire stadium, use all of the entrances there and things like that. So I think that's something we have to keep in mind there. Can Rocket go to 40 again in June? Who knows? I did a video on whether it's a meme stock or a fundamentals, and how you can kind of tell when it's moving. So we'll have to see if the short interest rises to the levels that it did before in February. It's possible. Or if, people all of a sudden realize it should be valued at a little bit higher, that's also possible. There's a U.S. government standard for this. I don't know, Carl, if you want to send me some stuff, I'm not sure exactly what you're talking about. I think my email, I don't know if it's on the channel specifically, but it's definitely on my website, just jpstrategicinvestments@gmail. If you want to send me some stuff, or you can always direct message me on Facebook. I'd love to take a look at it. Do we know subscription cost per door? I would imagine it's, if you're referring to each MSG lane, I would imagine it's a cost per lane. I don't think it's something like a flat rate or something like that. I would imagine a customer who's getting 10 MSG lanes is paying versus a customer who's getting 15 MSG lanes. The 15 MSG lanes is going to pay roughly 50% more than the customer who's getting 10. I think it's going to be basically per lane. Let's see. MSG2 will be released. Maybe you didn't see my question. Here's my question again. How many 10,000? You know, I can do the math on that, Kevin. You know, I didn't necessarily. I know you posted some stuff in Stockhouse, I believe it was, where you said it would take you know, 1,000, 10,000 per month customers to get to the operating expenses. It's not actually correct. It would take 100 times 10,000 is the 1 million. I forget. I'll have to take a look at it, but basically, right now, I'm not going to focus on 110,000 per year customers because we don't know what the average customer size is going to be. Like I said, we're starting to get to the point with the, you know, the numbers that we're getting, the information that we're getting from the report, and the revenue numbers, contracts, things like that, when they're going to recognize them. The more we start to get that over the next 1 to 2 earnings reports, I think we'll have a much better idea of kind of what the average customer is going to be and how much they're going to be making from each customer. Because again, as Peter mentioned, at least 2 of these are stadiums, and those are always going to start off with just the 2 MSG lanes or something like that at one entrance, right? Peter said that multiple times before. They want to test that out before they just throw everything away that they have and redo it with MSG before they know how to use it, is it going to work, everything like that. So I don't think we can really focus on the 110,000 a year customers. You know, you can do the math on that, but it's going to be like I don't know, 130 of them, a little less than that. If you think every customer is going to be you know, a 110,000 customer. Let me just see if there's any more questions, and then I'm probably going to end this pretty soon. I remember that I was just wondering if it was the same. Yeah, I would imagine it's the same per MSG lane. Peter defined the first 4 contracts as very small. Yeah, that's a very good point, Vineet. I hope I pronounced that correctly. Yeah, he said that these contracts were relatively small contracts, and so, you know, that's where I think it's important to keep in mind. We know at least 2 of them, unless I'm remembering it wrong from the webinar. We know at least 2 of them are stadiums, and I believe the other 2 were casinos. And we know the stadiums, said this, I'll say it again, are going to start off small. So they're going to be small contracts, but those small contracts could build into much larger contracts. And I believe it looks like one of the casinos is paying up front, with that 600,000 being recognized in the next year, and then the smaller part being recognized over the next 2 years. So yeah, we have to keep in mind these are relatively small contracts, it looks like, and we're going to go from here. Okay, this is the last question I'm going to take from Jason. I think I'm going to have to end it. Do you think, Pat, doing business with the government? I think he's you know, doing what he can to do business with the government. I know they were in talks with 3 states, he mentioned, and I asked him about this on the interview, but he didn't really give any further information. We have to keep in mind governments, they're always going to move very slow. I don't know about you guys in Canada, but the U.S. government, speed is not their forte, especially when it comes to things that around weapons and stuff like that need a lot of approval. There's a lot of red tape. So I think they're still talking with, you know, with those states, and maybe even a couple more states, but it's going to be a while. I wouldn't really bank on that for now. Let's see. Yeah, it looks like that is all the questions. So I am going to end it here, guys. Thank you for tuning in. Thank you for bearing with me on you know, those technical difficulties at the beginning there. I apologize for that. But I hope you guys found this helpful. Hope you guys enjoyed it. Thanks for all the questions. Thanks for all the chats. I really appreciate that. And let me know if you have any more questions. You can always, join my Discord. I talk with everybody on there. It's in the description to all my videos. So if you are looking to get more questions answered, more specific stuff, feel free to join that Discord. It's open to everybody. And like I said before, you can always send me an email or direct message me on from the Facebook page and things like that. But anyway, I hope you guys found this helpful. If you did, don't forget to hit the like button, subscribe if you haven't already. And other than that, have a great day, and I will see you guys next time. Okay.